What's good, everybody? Mokama Sunday service. Today we're going to be talking about fundamental analysis. Specifically, we are in earnings season again of quarter one. So today we're going to be talking about UnitedHealth Group's earnings, JP Morgan's earnings, and TSM, one of the darlings of the semiconductor sector, right? So, first, how to find financial statements for anybody that's new to this channel. It's really simple. I'll go out and do it for you. So, if I'm looking for UNH financial statements, I will type in UNH investor relations. Go to the investor page, and then there's financial reports right there, right? So that's the main start of fundamental analysis, at least for me, is right. I actually want to look at what a company is earning, how much money it's making, and we get a glimpse 4 times a year to figure out whether a company is actually making a profit or how the company is going, because traded comp- these publicly traded corporations have to make these SEC filings 4 times every year. So we are getting ready to head into the thick of the earnings season. We started off with a lot of financial stocks, but we also had UNH as well as TSM reporting. So we're starting with United Health Group. Why? Because this is a sector, specifically the healthcare sector, that I've been looking at because it's been down the most. And it's a sector I don't think is going away, right? Even with the Trump administration, do I think healthcare companies are going to make less money? Probably not. Do I think they're going to change the health system a lot? Probably not. So, and this is not me making a political statement, just looking at the Republican Party over the last 12 to 20 years, uh, they tend to, well, I'm not going to even go there. Generally, from a regulatory standpoint, we see reduced regulatory practices under Republican or conservative administrations versus Democratic administrations. So I don't necessarily think that healthcare companies are going to make less under a Trump administration, number one. Number two, the UNH CEO was recently assassinated, which was big news, right? And this goes to what people think about healthcare and the cost and it potentially bankrupting people and talks of them denying folks for no reason, whether or not that's true or not, but insurance denials, right? So since then, we've seen a drop in UNH's stock price. Also, with this recent earnings release, from just like a micro standpoint, we also saw a drop in UNH's stock price. And so for me, I've been looking at Lilly. I'm looking at UNH. I looked a little bit at Johnson and Johnson, but really Lilly's on the top of my list to on a pullback, specifically at the price point of $725 to hop in on a leap or buying some shares in my long-term account. And then number two, I'm also just looking at anything else in the healthcare sector. So UNH is reporting. So given that this is one of the largest, if not the largest company in the sector, we can probably see a little bit about the sector by reviewing its reports, right? And so specifically, we're looking at the financial statements. Like fundamentally, what is this company doing, right? This quarter reported $76.4 billion in premiums, $100.8 billion in total revenue, right? This is a monster company. They have products, they have services, right? But if you look at, is this company growing? It appears to be growing revenue if we're talking about gross revenue. So this last quarter of the same quarter of 2023, it reported 73.2 billion, and this quarter reported 76.4 billion dollars. If we're talking about on an annual basis, in 2023 at the end of the year, reported 290.8 billion. This year's 308.8 billion. So this is a company that is growing revenue. This could also be one of the reasons why people are pissed off at healthcare in general, because they're making record profits and There are people in the US that don't believe that they are getting the type of service that they should be getting when these healthcare companies are making record profits or record revenues, right? Well, let's say record revenue, and go deeper into the financials. It does look like medical costs, and I'm not sure if that's the cost of their doctors. They have a so when we talk about UNH, it's not just a health insurance company. They own facilities under another like sub corporation, not maybe not a sub corporation, but uh, they have different divisions, right? So they have the actual health insurance, they have the facilities, they have a pharmacy division, they have a data division. And so that's what makes up United Health Group Corporation, at least as the publicly traded company. So one thing I've seen is that it seems that their medical costs have gone up. Um, and the reason why that may be a little concerning is because even though they made way more revenue, it doesn't seem like their profit went up that much. And it seems like that is the major reason because operating costs went down. Cost of products sold went up a little bit too, but the medical costs went up more than anticipated versus like the revenue that they generated, right? So that's one thing, but in terms of what this company is making, right? They're making the earnings is $5.7 billion this quarter. So this is a company that made 15.2 billion on the year. If you look at 2023 though, the profit is actually down. That's why I should say gross revenue is up, but their profit annually is actually down, right? Because in 2023 it was 23.1 billion, and in this particular year it's 15.2 billion. But if you go look inside of the numbers specifically, the main reason for that it appears to be is there's some interest expense that's probably not always going to be there, and then it looks like they had a loss on a sale of a subsidiary of 8.3 billion, which is the main reason why this number is a little bit lower than that. So I don't think that that's a substantial factor going forward, unless they're going to be selling some more subsidiaries in the future. But if you look at the earnings from operations, it's about the same that it was last year. So if you're looking at the specific profits, it's about flat, right? So from an asset standpoint, so another thing that I tend to look at from a fundamental standpoint is what is the asset to liability ratio, right? Can this company weather a storm? Does it have enough cash or assets on hand to offset any potential debt or liabilities that it may have, right? So here, the assets they have are is $298 billion, right, in assets, which is crazy. And the current liabilities right now is 103.7 billion. That's almost like a 3-to-1 ratio, and that's pretty healthy for any company to have three times the amount of assets than debt, right? So I actually like that from like a balance sheet standpoint. This seems to be a company that does have, a good financial standing. And then what I was saying in terms of their different divisions, right? When we think of United Health Group as an insurer, it's not just an insurer, right? I think United Healthcare is the insurance operation. Optum Health, they may have taken over Optum, or I'm not sure if they created it or taken it over. I just started seeing Optums a lot, maybe 5, 10 years ago, personally. But it looks like they have the health Optum Health. That's probably the insurance section. Insight, that's their data section. I looked that up. Optum RX is going to be their pharmacy section, right? So the reason why I'm looking at this too is I'm just trying to figure out, like, out of their businesses, what seems to be the best business. And this data section, which is why I researched it, seems to be their best future business, right? So the healthcare insurance side, the earnings from the operations was 2.9 billion, right? Optum Health was 1.79 billion. Optum Insight was 1.27 billion. But look at the margins on that business. right? As compared to the margins in these other businesses. So for me, I'm like, this is where the money is going to be potentially in the future. And I did a little bit of research. They're just providing data and data analytics tools to other healthcare providers. And for me, so essentially this is their software portion of their business. And as medical record sharing is increasing and the increased uh, data in connection with healthcare, and like for the need for doctors to know your history and what's happened to you in the last 5 or 10 years, I think this might actually be the best part of their business, especially looking at their margins are extremely high in comparison to their other businesses. So for me, that's probably the most promising portion of the company is Optum Insight. It looks like it's already making money. The only downside of it appears is that there's some cyber attack impacts, just because it's a data company, right? But that's probably what I'm most excited about from an investing standpoint if I were to invest in a UNH versus like a Lilly or something else, right? So when we're talking about short term and looking at the stock price of UNH and why did it fall when it reported earnings on the 16th, it is because it didn't necessarily meet analyst expectations. So that's like a short term. But I'm talking, this is like fundamental analysis is more so if you're looking to buy a stock on a long term or take a leap or something over a long period of time, right? It beat its earnings per share estimate, but it missed slightly on the revenue. And if you look at the last 3 or 4 quarters, UNH has been a pretty consistent beat. And I would say that this may be due to, the UNH CEO assassination and all the negative news surrounding that, right? And typically I'm trying to pick up a company when everyone else is fearful that it's going to keep going down, right? Because that's when you're going to get a deal on the company. So the only reason why I can see that the stock price went down after the earnings report is because they expected 1.173 billion in revenue and it only reported 100.8 billion, right? Not a huge miss, but a slight miss. Right, so now let's go check out the stock price. So when we're talking about a deal, what's my price to potentially hop into UNH if I were to buy this? It would be 485, right? I drew my Fibonacci retracements on a 5-year week chart, 5-year week. You want to change that on Thinkorswim, which is the platform that I typically use. You go in here, change the time frame, right? So on a 5-year week chart, this is almost at a like 35% discount. But if you look at UNH, if you would have bought UNH a long time ago at the low or near the low at like what, $200 or so, you would have 2.5 extra money, right? So UNH has been a pretty decent stock. When you're talking about the technicals, not the fundamentals, but the technicals of the stock, this has been a pretty big monster. It looks like you had this long consolidation period right here, but over time this thing has been headed up, right? And so the reason why my price is 485 is because of this long consolidation period, right? A better price would be 461.5, right? These were the lows of that consolidation move, but I also like where I'm seeing all of these resistance points and support points at around 485. I also think that UNH, like after the assassination attempt, we're on a weekly chart, you saw this big red candle. I also think that it might be closer near exhaustion to a certain extent. And I just showed you the revenues. This is a good company, right? It has 3x the amount of assets versus current liabilities. It's making money. It's growing revenue consistently. So I want to see a company that is on a good financial footing, but the stock price is down, right? This downtrend right here, I believe, was after the assassination attempt. One of these downtrends, right? And then also healthcare has been down in general as a sector. But I really started seeing it come down heavily after the assassination attempt, right? Not attempt, I'm sorry, the actual assassination. So this came down, and it appears that right here it bounced. And that was around what, 482 for, even as far as 475, right? So if we're talking about a range from like 475 to 485, that's where I really want to start buying this stock potentially. And here, after the earnings, if we're talking about micro, this is the day that it reported earnings on January 16th. And we see a big red down candle on that day because it didn't meet expectations. But from a long term standpoint, which is why you should always zoom out, this looks like a pretty strong stock. And do we really think one of the biggest health insurers, one of the biggest facilities in terms of Optum, do we think that they are going to be going anywhere anytime soon, or that there's going to be some big wholesale change in the healthcare system anytime soon? I don't think so. That's just me reading the tea leaves. I don't care if RFK is coming in as the health and health secretary. I don't think he's going to be able to change such an entrenched system over the next 4 years. Nor do I think that the Republicans or the conservatives that are currently in power are going to have the appetite to do anything with the healthcare system. I think they're more so focused on immigration and other topics like that. I don't think healthcare is at the top of their list. So I think these healthcare companies, these pharmacies, pharmaceutical companies are just going to keep making billions and billions of dollars. Right? That's just my take, right? And from a fundamental standpoint, UNH looks like a potentially good company to invest in. Regardless of what you think about their practices and things of that nature, I'm talking about from a purely financial standpoint, UNH does appear to be a good investment and a good value opportunity right now. If it comes down to that price, what did I say?
445 or 5.
No, I think it's 475.
Oh,
475 to 485. That's the range that I want to start hopping in the UNH. I haven't looked at the chart, the long term options chain chart specifically to see if it has any liquidity a year out, a year and a half out on leaps. But I took my number one in the healthcare class that I'm waiting on is Eli Lilly. My number two I'm looking at right now is UNH, specifically from like a value standpoint. And especially healthcare is a defensive. It's a defensive sector, so it's one of those things that I would like to have in my portfolio because if like I'm heavy tech right now, so if tech comes down, healthcare is likely to stay steady or bounce up because it's in a defensive sector. So it'll be a decent hedge. And I just think this company, as well as Lilly, like I said, which is number one on my list, are likely to keep growing in the future. All right, number two, that reported last week, the biggest bank in the country, JP Morgan Chase, right? And this thing has been going to the moon and hasn't looked back. I've been looking to get into this thing for 6 months to a year, and it just don't pull back, which is good for people who got in a few years ago. But this thing just don't have any pullbacks, nothing like extremely significant anyway. All right, so JP Morgan, if you're looking at their total net revenue, they reported $42.7 billion this quarter, up slightly from $42.65 billion a quarter before. They had a monster quarter two at $50.2 billion. I don't even know what that's attributed to, but they had a monster quarter in quarter two. And if you're looking at the year over year in 2024, they reported 177.5 billion versus the year before at 158.1 billion, right? If you're zooming out. So is JP Morgan growing revenue? Absolutely. I don't know how they keep doing it, but Jamie Dimon over there is a freaking genius. Or he just runs a really tight ship. But net income, the profit is up to 14 billion versus 12.8 billion the quarter before. You're looking at annualized 58.47 billion versus 49.5 billion, right? So they are growing revenue. If and so that's why I'm saying just go look at the balance sheets, go look at the profit and loss statements, go look at all the financial statements of the company. Forget what you're hearing on TV. Like go look at the data. It's easy. Like it's 2025, and for the last 10 years, you've been able to go type something into a search engine such as Google, and you can go find this information relatively easily. So if you want to know if a company is a good company to invest in, go look at the statements. They're all there. They're publicly reported, right? So you can go do your own research, right? If you know what your finances look like. If you were making this much money or not making money or losing money every year, then you would know if you're a good investment or not. It's the same thing with a lot of these companies, right? Go look at what they're making, where they're going. So, and then specifically, like what sectors are making them the most money, what's growing the fastest, what's not. And then you can make a better decision as to whether or not you think this is a company that's going to be around for a long time or be first in class, right? So, JP Morgan specifically, investment banking fees were up. The principal transactions, which I believe is probably M&A stuff. So, and people have been talking about this over the last year or two, is that M&A, mergers and acquisitions, have been down. They've been blaming the Biden administration for essentially squashing a lot of deals. But, M&A, it seems like is a little bit down. Their deposits are slightly up. The asset management fees are what's been pushed up, right? So apparently whoever, and now that I think about it, JP Morgan has been sending me a lot more emails related to asset management over the last year or two. So that might be the reason. I like to manage my own stuff, but it appears that they're making more money in the asset management sector. Commissions are a little bit down, right? Look at their credit card income, though, right? So, and I assume that's because of the rise in interest rates. So it appears that most of their growth has come from credit card income and asset management fees, right? And if M&A transactions kick up again during the Trump administration, which I assume it will, I assume they're going to block a lot less transactions than the Biden administration was doing. Then I assume probably their M&A fees are probably going to go up too. Total net revenue, so profit, $42.7 billion, up once again from last year. And if you're looking at so for banks, the one thing that scares me about banks, just because, say, over the last 20 years, just having some personal experience and being in the market recently, I no longer think that banks are too big to fail. I no longer think that banks can't fail. I no longer think that there can't be a run on the bank if there's a recession or something like that. So, like, I want to go look and see, hey, if there is a run on the bank, can this particular bank withstand that run, right? And so here in their liabilities, they put their deposits, right? So that's you and me that have JP Morgan Chase accounts, right? We have JP Morgan Chase accounts, we have deposits that we put into the bank. They use that money to lend to others for different things, right? That's how banks make money. And so they got $2.4 billion in deposits. I like the fact that their assets are more than their deposits, right? And then their asset to liability ratio is a little bit greater than one, right? 4 billion to 3.6 billion. Actually, I'm not sure. This says this is in millions. Don't quote me on that. This might be large. This might be like 3 trillion or something like that, but because it's in millions. So either way, their asset to liability ratio is greater than one. Of course, I would like to see that be 2 to 1, 3 to 1, like we just saw in UNH. They had a 3 to 1 ratio. But just imagine if 50% of the people do a run on the bank and just take their money out and go to cash and put it underneath their mattress, right? They could withstand that, it seems, based upon the amount of assets they have. And, I want to go look at the other banks as well, but I assume that they're capitalized more because they're number one in class and they're making the most money out of all of the banks right now. So the safest bank probably to put your money in right now would be JP Morgan and Chase. And then some other banks did report, and I really want to go look at that, like based upon the deposits that they have, like how much do they have in assets? Like if something happens, like what are they going to do? And of course, any bank that has a run on the bank is going to be in trouble. Might need some federal backing and whatnot. But number one, J.P. Morgan tends to have a really good relationship with the federal government, and it tends to get all the sweetheart deals when another bank fails or a smaller bank fails. But just looking at this, like this, it seems to be pretty safe. Like what I don't want to see is if this were like a number that was 3 million and then this was five. That means that the bank is underwater. That's not a good sign, right? And of course, if the regulators start seeing this too, that's when you start seeing the federal government come in and start taking over banks or selling portions of it off to a bigger bank. Is if they see the bank is underwater. When you're looking at why JP Morgan went up after its earnings report, it's because it had a significant earnings per share beat, right? And this is more so analyst expectations. This is just straight from Google. They aggregate analyst reports, right? The analysts expected them to report $4.04 per share in terms of earnings per share. Oh, sorry. And they reported $4.81, which was damn near a 20% beat. And then the revenue was slightly up more than what was expected. They expected 41.56 billion and they reported 42.77 billion. So what did that do to the stock price? All right, if you look at a 5-year week chart, JP Morgan would have been an amazing bet if you could have bought it around $75 and it is now at $259, right? So that's what 3.5x if you would have invested 5 years ago at around the lows. And look at what it did. So it reports earnings. What day was that? 16th or 17th? No, it was this day. Yep, this big green candle. And the market reacted positively to it, and it hit another all-time high. So JP Morgan is still cooking. I really love this stock, but like I keep saying, this thing does not pull back that often, so I haven't really had an opportunity to get in. This would have been the only opportunity to get in, but I usually like to see a more severe pullback than that. I want a bigger discount, me personally. This would have been a great place to get in, but I generally want a larger pullback on anything that I buy so that I got more room for error. But JP Morgan just hasn't been pulling back. This has been one of the stronger stocks over the last year or two, right? And it's definitely been the strongest bank out there. All right, let's go to the last one I got for today. TSM, or Taiwan Semiconductor. The reason why Taiwan Semiconductor is so powerful as a company is because they decoupled manufacturing of semiconductors from design. So if we look at Intel right now, if you look at their stock, it is trash. It is garbage. They're losing a ton of money. And my main hypothesis for that is because Intel is still an old school semiconductor company, one of the first that revolutionized the industry, but they manufacture and design their own chips. And so for me, that's like we've now learned that might be two separate companies. So they're running two really difficult companies inside of one house. Nvidia, on the other hand, only designs chips. AMD, on the other hand, only designs chips, right? Taiwan Semiconductor only manufactures chips. They don't design them. They take the designs of other people's, they take other chip designs from other companies and then they do the manufacturing. So that's why they're way further ahead than Intel and a lot of these other manufacturers, is because this is their singular focus. And the same thing with Nvidia and AMD, their singular focus is just on the design of the chips, not the manufacturing. And specifically for Nvidia, the reason why their margins are so high is because designing is way less expensive than manufacturing. Taiwan Semiconductor was able to put billions of dollars into its manufacturing industry because it had government help from the government of Taiwan, right? So, but the government did this years ago before anybody thought that the semiconductor sector was going to be what it is today, and that's why TSM is so far ahead, right? It had a lot of help from its home government to manufacture its plants. So, with that being said, Taiwan Semiconductor is a great company. The only issue that I have with the company, which I've talked about previously, is what happens if China invades? Because Taiwan says Taiwan is Taiwan, and China says Taiwan is China. So, at what point does China invade Taiwan, or do they invade Taiwan? Do they look at the Ukraine situation in Russia and go, you know what, it's not worth it? Do they take a less heavy-handed approach and spend a lot of money there, or try to gain a lot of influence to where the population wants to voluntarily come back into China? If that happens, once again, that's going to affect our ability, meaning the US's ability and the international community's ability to get these advanced chips from Taiwan. So as of right now, if I think the U.S. is going to go to war over any country, it's going to be because of Taiwan, and it has nothing to do with any altruistic values or anything. Is to specifically protect our economic and security interests. Right? These semiconductors are in all the missiles. They're in all the planes. They're in all of the cloud computing architectures. They're all the chips. They are manufacturing all the chips that we're using in the AI race right now. So this is why I think this is probably one of the most important companies in the world right now. The only issue is what happens if China decides to take military action against them, which it has been stating it might over the last decade or so, right? And if you go look at their profit and loss statements and their financial statements, it's a little weird. And I'm not gonna say it's weird. It's just yes. This thing doesn't have no straw. Okay, we'll get you a straw. Oh, it fell off here. We'll get you a straw in a minute. Okay, I'm almost done. Sorry about that. So, looking at the net revenues over the last quarter, it was $26.8 billion. Right? Okay, you can use that straw in that cup. It was a smoothie in there. And you didn't even eat a piece of that thing. That's old. I know. Okay, so 26.8 billion in the last quarter, and the NTD is new Taiwan dollars, so they only report the US dollars for this current quarter. So you kind of got to look at what their increases in revenue were based upon new Taiwan dollars. And then you can go do the extraction on ChatGPT or Google relatively easily, right? So 86.4 new Taiwan dollars was this quarter. As you see, it was up from the last quarter and up from the last quarter, right? And year over year, it's been a 38.8% increase. So from a revenue standpoint, this company is booming. Right, their gross profit has also been growing. You can see that if you look at the new Taiwan dollars, 512, right, 439. The quarter before, 331. This is a company that is growing revenue consistently. Where's income? Income from operations is also up. If you look, so it was $13.1 billion of income, which is amazing. This guy doesn't poke in. Which is amazing because look at the margin on that. So income, so you got 26 billion in revenue and you're taking home half of that in income. That's crazy, right? Same thing if you're talking about even net income, that's a really, really good margin, like 40% net margins, not gross, but net margins. Like this is an amazing company in terms of the revenue. And that's all it does is it manufactures semiconductors or chips, right? And then from an asset standpoint, same thing. The total assets is $204 billion, and the total liabilities is 72 billion, which is a 3-to-1 ratio. So this is a healthy company from a standpoint. If we have a recession, this is a company that's going to be able to weather a recession because of the cash it has on hand as well as the assets, right? It has $64 billion of cash on hand.
Daddy,
Right.
I need another straw.
What? Hold on, baby. And so, if you look at the expectations and why this stock went up, it's because it had some earnings beat, right? This is in new Taiwan dollars, right? But it's slightly beat on the earnings per share and slightly beat on the revenue. All right. So once again, let's go back to the chart. TSM is also something that hasn't pulled back that much. And honestly, like other than like Nvidia in the semis market, like this has been it. It had this dip right here, but after what that 2022 dip, it's been all upside since. Right, you would have bought that 5 years ago around $40. That would have been a 5x return. And so if you just look at what it did, it dipped. It looks like a little bit before earnings. Actually, no, it dipped a little bit on earnings, but nothing like once. I would love to get into TSM, but I'm already oversaturated in the semiconductor market. I own some Nvidia, I own some ASML, and I intend to get in on an AMD leap if it hits my price within the next couple of weeks. If it hits that 110 price that we talked about previously, so TSM, I love it as a company, but for me, it's more so the geopolitical risk and my overextension in the semiconductor market as to why I wouldn't get into TSM. But it's a great company, great stock, and it's necessary, right? Nvidia. TSM manufactures Nvidia chips. It also manufactures all of the other big players in the market too that don't have their own fabs. So the only, I think, existential threat to TSM, other than the geopolitical threat with China, is that the Nvidias, the AMDs of the world start manufacturing their own chips. But I don't think that they would do that because then they start losing their margin and they have to start investing so much cash into those operations and then they would have to catch up to TSM, who has the best technology and the best manufacturing process because it's been doing it for so long. So I think it has a moat around manufacturing where it's going to be very hard for anybody to catch up to their technology, to catch up to their processes, and then the biggest chip designers in the market right now have no incentive to start manufacturing themselves and start dumping all of the cash and all of their margin into manufacturing rather than just consistently getting better at designing chips. All right, bam. Okay, weekly stock picks mostly for this is for swing trading. Candidly, my long-term trading has been doing way better than my swing trading recently, which is why I have reduced the volume where I'm trying to maybe just do one a week, right? One good setup. For this entire YouTube, it's in the notes, it's in the description. This is for informational purposes only. Trading, investing is risky. It entails a lot of risk. I'm not a financial advisor. You should refer all of your trades and investments to your licensed financial professionals if you have one, right? And do your own research. The whole purpose of this is so ideally you get to a point where you are able to figure out whether you want to trade something or invest in something based upon your own knowledge and your own research, right? So what I'm looking at this week is the energy sector and oil because that's what's up. Over the last 30 days, these last week or two, the energy sector has been climbing. So I'm mostly waiting for pullbacks in the oil energy sector. All of these, XOP, OIH, and XLE, have a lot of crossover between stocks, right? You got ExxonMobil, Chevron, ConocoPhillips, Schlumberger, WMB, things of that nature. They're going to have a lot of crossover, right? The ones that are going to have the most liquidity are going to be like the ExxonMobils and the Chevron. The ExxonMobils and the Chevrons of the world are going to have the most liquidity typically if you're trading options, right? So that's primarily where I'm looking next week. Maybe semis, but everything else I feel like has been flat or going up and going down and kind of being flat. Energy is the only thing that I've been seeing recently that has really been trending. So that's where I'm probably going to be looking next week for a swing trade in those names that I just told you about. Um, and I'm not really even going to go through the charts or anything this week, right? If you're going to short anything, consumer staples is the easiest thing to short. But recently, everything's been bouncing back. I took a picture perfect trade in XLI last week that went the wrong way on me. I got out with about a 25 to 30% stop loss, right? It was a picture perfect setup, negative trend, red trend, bouncing up on a green day. I got it when it was extremely exhausted, and it still went up, right? And you see XLI is positive now, but so really, even your best setups still are going to lose from time to time. And so for me, I'm thinking about focusing mostly on leaps this year because that has been giving me the highest alpha. It involves fundamental analysis and the actual earnings of a company and how well it's going to do over a longer period of time versus the short term stuff, the day trading, the swing trading. So I've cut down my swing trading to probably just doing one a week. And I'm more so going to be concerned on leaps and putting all of my capital probably buying leaps most of the year at discounted levels in certain stocks, right? So specifically, still looking at Lilly. I'm still looking at UNH. I'm looking at AMD. Micron kind of blasted off, but if it pulls back down to that level, I'm still looking at Micron, LVMHF. That doesn't have any options, so maybe just the shares on that. And then I think there was one more that we talked about that I can't remember right now, but those are the ones that I'm looking at potentially to buy leaps or going long term. If I'm going to swing anything next week, it's probably going to be in the energy sector. It's the strongest sector right now, but I will wait for a pullback on the sector to buy for it to keep continuing to the upside. All right, that's all I got for y'all this week. Any questions? Y'all want to look at anything?
Good game on my end. Thank you.
Appreciate you again. Matter of fact, let's look at alarm.com real quick before you get off,
You
if
always
that's
be having
possible.
these weird stocks. Alarm.com. What's the ticker?
I believe it is ALRM. It could be.
Alarm.com Holdings? I
Yes.
think this is the same one. That's because you're in this industry. It's still keeping that same trend because I still had that same trend line from the last time we talked about this. It bounced up a little
Okay.
bit, but it's still got a negative trend. And like what's good, well, I'm going to say necessarily negative, it's wedging right now because this low is a higher low, but it's still like it finally kind of broke this high, but if it's not breaking this high right here, just from a
Hmm.
technical standpoint, come on. All right. Like that high, that was the last high that didn't like come up higher than this last high from a trend standpoint. So before I would say that the trend is changing on this stock, it needs to come above like $72. And then it's making higher highs again, which means that you got a new trend to the upside. So before I would touch this thing, I would want it to see a break a high of $72, and then I'd be like, okay, this thing, the trend is changing. But right now, the fact that this high didn't break that, it's like it's gaining momentum and then coming back down. If I were to trade this thing, I would be trying to get it around this $52 area, $52 to $53 area is where I would try to pick it up on a trade and then try to sell it once it gets close to this range that it's been keeping. Um, but I don't. For me, there are so many more from a long term standpoint. There are so many more better stocks in the market. Like, why would I take this one? Because just look, 5 years ago, it's barely up from where it was 5 years ago. And if you got it at this high, you've been flat the entire time. If you got it here, you're kicking yourself, right? So Like, I don't want to see a stock that has a big high up to the left and then it continues to go down. If you look at the last 4 years, it's been a negative trend the last 4 years. Why would you invest in that when there are companies out there like Nvidia that look like this? Even AMD, it's not Nvidia, but AMD looks better than that, right? It's going from the bottom left up to the right. AVGO looks like that. Even Microsoft looks like that. Apple looks like that. Google looks like that. Amazon looks like that. Lilly looks like that. UNH looks like that. So it's like, if with all of these other really good companies out there, why are you trying to buy, something that looks like this? Even Shopify, which is one like, doesn't look that great, but from here it looks better. Higher highs. Higher. I'm just saying from a trend. Higher highs. Higher highs. Higher. Right? That's what you want to see, even for a stock that's coming back. Like, what's Disney look like? That's why I really haven't been effing with Disney. Same thing. I might grab it at 100, but I don't like the fact that it's not making higher highs. It's just been, yeah. So there's just better stuff in the market to buy. So like,
Gotcha.
bet on Michael Jordan. Stop betting on Tony Kukoc. I'm just for real. bet on Patrick Mahomes. Don't bet on who's don't bet on Deshaun Watson.
Tony was trained though in Croatia though.
Huh?
So don't. I said Tony was great in Croatia. Don't
Well,
get
but
twisted.
yeah, but I'm
I get
but he
what
in
you're
the big
saying. I get what
leagues
you're
now.
saying.
Yeah.
I get what you're saying. I get what you're saying. I get what you're saying.
Bet on the Chiefs. Why like the Chiefs are winning all that? Why and the refs are helping them? So bet on the Chiefs.
Mm-mm-mm.
I, right? Yeah.
Well, Mo, I appreciate you as always, and see you next week.
All right. Next time, 8 a.m. every Sunday. Making it rain without the umbrellas.
Appreciate you, man.
All right.
Appreciate you, my guy.
Y'all too. Stay safe out there.
I just drink them. I just